Good morning, everyone, depending on where you are in the world. Welcome to another Market Stalkers Ultimate Coaching session. I have Astrid here. She is wet because she rolled in something in the park, so she had to have a bath, which wasn't really that great. And then she came upstairs, started running around, and she must have pulled one of my leads or something. So just before I was about to stream, my microphone was making an awful buzzing noise. But luckily, it was just a loose cable, so troublemaker. Are you a troublemaker, Astrid? Are you a troublemaker? What, me? Me? Yes, I am. All right, so let's see what we have today. I'm going to let Astrid go to sleep because she was running like a lunatic in the park. All right, let's see who we've got here. So hopefully the video, audio, all good. Let me know by typing yes in the chat box. Then we're going to see who we've got in the house. As always, I've got my trusty little insulated tumbler mug that can close up so that I don't spill anything on my keyboard. If you want to get one of these, you can find a link down below this video, hopefully. All right, let's have a look at some markets first. So let me share my screen. Oh, where's my ES chart? What happened to that? There it is. Okay. And before we go into the members review, I'm going to have a look at what's going on with the markets, just to kind of get that context, just so that we're not bumbling around. Everybody needs to be on the same page. This is some weird limit order. I don't need that. That was from London. I was waiting for that to happen. Never happened, so that's gone. Okay. Clean up the charts. Object list. Now, every time I'm about to do a new plan, what I want to do is have a clean slate, right? We don't want messy stuff happening because that's going to complicate things. So before I start, sometimes I do this on the fly when we first start streaming. But yeah, a good way to do it is just to go object list and then just delete everything and start again. That way you're starting with a fresh slate. All right, who have we got? We've got Nullset, hello. We've got Giles, got Brancy and Brent so far. That's pretty good. Okay. For those of you who are not Gold members, if you want your plans reviewed, send it. Screenshot, you can just screenshot it and send it. Send it to info@marketstalkers.co.uk. Then I'm going to drag it out and we can have a look at it. So yeah, info@marketstalkers.co.uk. I might put that in the chat as well. There we go. So yesterday's FOMC minutes, storm in a teacup, just as I thought. What do I mean when I say storm in a teacup? Well, it's basically price action that has some movement to it, but ultimately it doesn't really take the price to any new levels, okay? So that's what I mean. It pretty much stayed range bound, so whatever they established, that was it. They kind of popped it slightly to the bottom and then just kind of stayed there and made a little bit of a reversal for the final half an hour. So that was like standard day range fill, right? So again, storm in a teacup for FOMC minutes. Non-trend day on both GC and crude oil. So that's not exciting at all. Let's have a look at the higher time frames on GC first. Just gonna check that. You guys can see that. Okay. Right, so one of the things that I can see here is that phase 4 is still kind of continuing. But we do have some weekly conterminous line that's coming up around these levels. So slight caution for the continued shorts around here, just until we see what the price is doing, whether it's reacting to that level or not. That is something that needs to go into your kind of a top section of your intraday plan, because you don't want to be just staring at the intraday timeframes and profile, even though that is the primary thing you want to use for your trade locations, but it's not necessarily what you should be using just for direction, right? If all of your intraday levels are gone, if they get exhausted, exceeded, touched, reacted from, or busted, you need to have a fallback plan, and that's where these larger time frame awareness moments have to come in. So that's why we do this. So on the daily chart, not that much to see. Daily Q low, which is non-reactive at the moment, but again, right now we are kind of coming into that weekly conterminous line just now. Let's see what's on the 4-hour chart. Very spiky 4-hour chart. So doesn't tell me much, basically. Let's have a look at London developments in Asia. Asia took the move up. London then proceeded to take it down. And then it was pretty static for the overlap. And now we're continuing down. So I would say this is a standard day kind of cat and mouse. However, we still need the initial balance to extend. Like I said, this is a non-trend day. And until that changes, you know, it's always going to be much slower. So because of that, I'm going to wait and see what happens around this weekly conterminous line, and then decide. The open on GC is below value and inside range. So with that, the first hypo that should take precedence in your plans is the sustained auction short, and failing that, the value acceptance long. So that's immediately two things that you can look at. The third and fourth plan should be reserved. Well, one of them should be some kind of a failed auction or an auction phase, depending how much the market extends past the initial balance and whether the auction is successful or not. Also how much actual range you've got left, and we don't have that much. You should always include things like initial balance size as well. And if you want to go one step further, you can use that value at risk information to look for an additional bottom, statistical bottom, I suppose. Isn't that a nice word? Statistical bottom. So on gold, I think that's about 1.6% from what I remember. So there's plenty of space for that. And this is a Thursday, so usually Thursdays can start new trends. That's something that we've noticed statistically. So yeah, with that, my choice of hypos would be so sustained auction short, but limited, because today we only have 37 ticks before I hit those average ranges. And again, this is where additional information like the initial balance size can also help you. So if you compare the initial balance size with your average session range that you have for that day, that could give you valuable clues of what kind of day you could be looking at. And for now, because the initial balance is actually pretty wide, it's 127 ticks. So that immediately puts this whole day more into the responsive activity day. So expecting some further movements might be a little bit outside of this day's ability. Just purely looking at probabilities and statistics. So with that, I'm going to change the first two hypos. So you see how like analysis and talking things through with yourself, it tends to lead you to different conclusions as you're going through more and more data. So I'm not making it up. I know that on a day where the market opens below value inside range, the first highest probability setups are sustained auction short and value area acceptance long. But if you have a wide initial balance, immediately you need to default to things like neutral days, failed auction long, maybe a hybrid auction fade with a failed auction if you don't have enough space for the auction fade to actually work. So effectively looking for the market to just exit to either side of the initial balance, and then looking to fade that. You can reserve one setup for potential breakaway in case that you have a larger volatility day, which can also happen on a Thursday. So it is very possible to have a breakout, but how probable is it on a day when the initial balance is also pretty large? Not that probable, right? So all of that has to play a part into how you formulate your intraday plans, right? Just wanted to make that perfectly clear. Okay. I'm just looking at the inbox. We have a couple of submissions here. Again, the submissions are anonymous, so I'm not going to say who it is because you know, I know that especially with people who are not gold members and you might be doing this for the first time, it might be a bit daunting, right? It might be scary to kind of put yourself out there. So no names, no nothing. It's literally just submit a plan and we're going to discuss. And this person has submitted a plan for crude oil. So why don't we look at crude oil first, again, so that we can be on the same page. Crude oil is still a non-trend day. Let me just move this maybe like this so you guys can see the price and me. Okay. Put the clock up here just to fill the empty space. All right, let me grab a screenshot of that. Okay, it's quite thin, this this plan. Oh, I didn't grab that properly. All right, here we go. Close that. So, Giles says, I found it hard to formulate the hypos today with that average session range and average daily range location. Not much potential for sustained auction to extend, but not a lot of room for a reverse back to initial balance low. So that's gold. Okay, so before I go into this, let me just default back to gold for a second. Yeah, so because of the size of the initial balance, the average session ranges are not that far away on gold. So if I just clean the chart up a little bit, so this is where one of them is, and then this is the other. So this whole development is happening right sort of in the middle of the ranges, meaning that we haven't really moved much, and yet at the same time the initial balance has filled that range. Usually on a Thursday we have jobless reports, which can cause this, but at the same time those jobless reports can also push the Thursdays into a higher volatility day. So one thing that you may want to do, you know how I was talking about the value at risk measure? Well, going through every Thursday over the past year or so, at least over the past sort of 6 months, so that you get a reasonable amount of Thursdays, and then just seeing how big those days are in particular. It shouldn't take that long because you can kind of filter stuff. It's a bit fiddly doing it in Excel if you don't know how to code, but it's totally doable. Like, it might help you a little bit of time to kind of just go through the dates. You can do it really manually, right? So you can literally go, what date was a Thursday, and blah, 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 go through 4 of them, go back 3 to 6 months, and then have a look at the size of them, right? And that will give you a pretty decent idea of how much movement statistically you can expect on a Thursday, okay? So that's one way to tackle this. And then you'll kind of have an idea whether to expect a larger day than what you have currently, despite the large initial balance. This is like advanced stuff, right? So this is like going one step above your basic skills. You're working as like a detective to figure out what can happen statistically and probabilistically on that particular day. So because of that, purely based on the initial balance size, I would say that you can have a failed auction. You can have a neutral day, which you've put as well. But any sort of super extension might be a little bit lower odds, and that's absolutely fine. However, if you do get a Thursday where, you know, things go a little bit crazy, one of your hypos should ideally cover that. And I think you would cover that with either a short sustained auction and just tracking what the whole profile looks like. So for example, yesterday I was talking about a large candle rejecting the initial balance and going into sustained auction, and how that's not very favorable, because the larger the candle, if something goes too far too quickly, what does that mean? Well, it means that you're effectively at risk of getting a pullback. Yeah, and I mean, yeah, sure, it can continue, but the likelihood is that it's going to go the other way before it continues. So again, you have to be aware of those little things that, you know, it's the thing that takes the most time to get to know the product, how it breathes, and what is acceptable and high probability in that particular product and what isn't. This is why I force everyone to start with just one product, and then once you know that pretty well, and if you decide to continue with the coaching for like another 6 months or so, we can then tackle the really kind of finer points of the product and maybe look to add another one. But you know, if for the first 6 months, it's literally just honing your skills, getting to know the product, and gathering some stats and experimenting, obviously. So with the positions of the average daily ranges, I would say that even if this goes into a value acceptance, it could rotate through the entire side of value, but it could also be a fake out, because, you know, it's not the best day for this. If the initial balance was not this big, obviously we would have had more chance of a sustained auction, more chance of other time frame participants turning up and taking the price further. Okay, so some days will be difficult. Okay, it will be very tough to formulate anything that makes some kind of a sense. And to be honest, February has been tough. Everybody is like, who I've spoken to, they're like, oh man, I am profitable, but Jesus, is it difficult? And this is the typical thing for February. It's like, yes, there's movement, but everything's sort of limited. It's almost like people are back, but they're a little bit hungover from, you know, New Year's Eve and whatever. Some people are doing New Year's resolutions, so they're doing other things. And, you know, one of the side products of that is that movement in the markets is not necessarily going to be as smooth as it usually is. You're going to have a lot of fake outs, a lot of tug of war on both sides. So all of that is fine, perfectly acceptable, but it also offers us a very good opportunity to learn on these tougher months how to not go crazy. And you know, in trading, for a lot of the time, you're up against yourself, really, because you can't do anything about the fact that the markets are not really moving that much, right? The only thing you can do is just sit tight and be reasonable, right? Wait. Don't overtrade. Don't go clicking buttons. If you're having troubles creating the plan, that's absolutely fine. So some days That's how it's going to be. But, you know, I'm just giving you ideas of how to approach that side of things. So on a day when the initial balance is large, failed auctions and setups that work with that range would be better, always. And whenever you don't have enough room from the average session range or average daily range outside of the initial balance, that's always a failed auction potential. All right, let's see this plan submission. And then we can discuss. Move the clock down. Right, so first thing I'm going to say that this plan is a little bit thin. As soon as I saw this is kind of like one-liners and like, you know, CL, daily weekly chart. And it says daily demand reaction inside bar. So first of all, if you're going to put daily and weekly chart, that means that you're gonna have to look at the weekly chart as well, right? So Astrid, be quiet. I know I can hear the door. I can't get to it right now, darling. You're being a good watchdog. Yes, good girl. So the first thing that I would have placed here is the fact that we have a phase 1 potential on the weekly chart that is range bound. And then finding the edges of that would be the next step. So that's all, that should be all a part of your larger time frame investigation, due diligence. Then on the daily chart, what you say? You say daily demand reaction inside bar. Okay, so yeah, there is a reaction. Okay, we've reached a demand level on the daily chart. There is a reaction. The problem with this statement is that you're using an unfinished candle from the daily chart to say that this is a reaction. You don't know that because the day is not done yet. Anything can happen. This can actually end up all the way down, and then what's going to happen is that your plan is banking on this upside movement and a reaction, but you don't have that printed on the chart. So by the end of the day, if you still have that, you can keep that for tomorrow. But until the day is done, you cannot put statements like daily demand reaction inside bar that they're not over. You know, the day is not done. So only put reactions that are finished for that time frame. Okay? Then on the profile area, it just says inside value responsive activity. Not much mention about the initial balance developments, size of the initial balance, nothing. So it's another one-liner. So this is the kind of thing you want to avoid. Why? Because it's going to put you on a very impulsive side of things. Because you didn't explain to yourself what it is that you were looking at. Yeah? So the main issue here that I see is that you just have inside value, but we've had the rejection of that that particular area, of the value area. There's also an ADR exhaustion that I don't see anywhere here. So, you know, that should go into the day time frame developments too. ADR exhausted, right? So I don't even know whether that's something that you saw, whether that's something that you planned. It's not very clear what, you know, what you're saying. So I would add initial balance size. Is it normal? Is it large? Because again, that can give you valuable clues over what kind of day you're looking at. Yeah, it can be an inside value, but inside value days can also bring really nice trending moves sometimes. If the value gets rejected, the initial balance is small, other time frame participants appear and they start taking it higher or lower, right? So that needs to be in your plan as well. And then hypos. 1, neutral day. Yeah, it can happen. Would I put neutral day as the first hypo? Probably not. Why? Because neutral days are preceded usually by one failed auction. Because in order to have a neutral day, the market has to exit one side of the initial balance and then rotate all the way through to the other side and bust the other side. So the probability that the neutral day is going to be your first choice, if you're doing this at the start of the market open, it's probably not going to be the highest probability thing that happens, and probably not chronologically as well. So if you're looking at a neutral day setup, that's fine. Just put it at number 3 or 4. Okay? And like I said, if you're looking at the responsive activity day, a better choice here would be a failed auction long or short, depending on what you have happening elsewhere. Okay? Second choice here, sustained auction short. Again, I would say that this hypo is more going against what's already happened, so you're not being very objective. You're not taking in all the facts that the market has already given us. What is the fact? The fact is that the market went outside of the value area and closed outside of it. So thereby already rejected to the upside. And in order for you to have a sustained auction short, yeah, that could happen. But on an inside day, you need 2 things. You need the market to reject the value area to the side that you want your trade to be. And then you also need the market to reject the initial balance while that's happening. So if you're looking for a sustained auction short, the safe way, well, first of all, you don't have much space. You have 47 ticks before it hits the average session range. Again, that's not in this plan either. Like, there's nothing mentioning the average ranges. So the very thin, you know, very thin. And then the third choice here, you've placed VWAP long. So VWAP long, yeah, I mean, VWAP not really a part of my whole setup. Guys, how is the video? Because I'm getting a notification about video issues. Because I can see it's a little bit jittery. So yeah, the final setup that this trader gave was VWAP long. So presumably using VWAP as a trade location. Again, I wouldn't use VWAP as a trade location until you have a whole bunch of other stuff happening. Yeah, so it is stuttering. Yeah, okay. Interesting. Why is that suddenly happening? Don't tell me it's my network again, which is very annoying. No, I'm definitely getting some dropped packets. I can see it on the streaming software, dropped frames. But I'm just looking at my connection, like I don't really see too many issues. What is that? And I don't have anything much open, like it's all pretty normal. All right, well, if it's workable, I just gotta keep going. So yeah, for that particular trader, I would say you probably want to have more detail and you want to do a little bit more due diligence on whatever's going on. VWAP on its own is probably better used as a target rather than a starting point. only if I have like things like VWAP, maybe a session range crossover, or demand or supply with VWAP somewhere there on a responsive day, I might consider it as a supportive factor for any kind of weeb or SEEB setups. Apart from that, I just don't think that using VWAP as an entry do or die, like just on its own, is a very high probability setup. Because it's kind of like you're, again, working off some sort of a moving average that is a middle of a middle. Anything that's a middle of a middle works best when used as a target. So just keep that in mind. Right, so Nullset says, I changed my quality setting to 720p, which fixed the problem. Okay, so yeah, maybe that's something to try. Let me see what that looks like on my end. I mean, bizarrely, on my end, it kind of seems all right. You know, I never know what YouTube are doing. It's always so weird. Like sometimes they give you, now it's excellent connection. Well, there you go. Great. So the notice from YouTube has now disappeared and we're back. Ugh, God. Right. Let's have a look at one of the gold members. This was for gold members, trading gold, yeah. So just to kind of compare the quality of those plans. Now this particular trader does everything in a really nice, succinct way, but it has, at the same time, it has loads of detail. Like everything that should be in there is in there, so full prompts for that. Here we go. So GC, we know that it's an open below value, large initial balance, and all that jazz. So here is the top part of the plan that I tell people to write important stuff that's happening on those large time frames. So here he's going phase 4 liquidation. So he notes that we are in some kind of a downtrend potentially. Middle of the Q point range, testing 50, moving average, no weekly, conterminous demand line, supply is nearby. Well, now we kind of reached it, but yeah. Daily chart, same thing. Phase 4 liquidation, middle of Q points, breaking down from accumulation zone. Now, breaking down from accumulation zone, I wouldn't really deem this an accumulation zone. This was more, so when was that? Let's see. One of these is a Sunday, and then you had a small Monday because it was a holiday. We have to differentiate. So the only thing that I would say here is that you need to differentiate between candles that represent inactivity and those that represent price agreement, aka phase 1. So whenever you have a holiday, whenever you have a Sunday, you can't really take that as accumulation because it's not accumulating from anything. It's just nobody's trading it. So there's no accumulation following a price agreement. There's just lack of activity. And you can usually see that by the volumes. This is where Blahtech better volumes can come in. Not to kind of go overboard with volume analysis and reading too much into it. Nothing like that. Just literally to see that there was no volume on Sunday and super low volume on Monday. So that should immediately tell you that something is not quite right. But when you have a proper accumulation, that volume is going to be pretty significant. So that's where it differs. it's like a lot of volume. They're still trading it, but there's not enough movement because everybody's agreeing that that's where they should be. That's what the real true accumulation is all about. Just give me 1 second. Go on, off you go. Go. The rest of them have just come back from walkies, so yeah. So yeah, that's one critique that I would give for this particular plan. And then 4-hour chart, phase 1 accumulation. Again, be a little bit careful with H4 because a lot of the times it would include overnight trading. So that's again not accumulation, it's just lack of activity. So those are like two very different things. Even though they look the same, the implications of both are quite different. So anytime you have phase 1 accumulation, but it's literally only showing up with very small volume, that's not accumulation. It's just literally overnight inactivity, effectively. Then he goes on to track the initial balance stuff and profile stuff. So open on the profile, so that's open sentiment, just below value area low, bearish but value acceptance possible. So that immediately gives you two setups, right? This is actually something that I put in my original template in just like a Word file, and it's a drop down. So it already gives you a prompt of what can happen, but I can see that this trader has also included that in their formatting. And then we've got ADR reading, average session range reading. So again, intact, normal day, you can expect post downward cut, day range fill, reversal price action, intact, all setups available. Reversal, failed auction, sustained auction, reversals, blah. Yeah? Initial balance, large, over 100% ADR, responsive, failed auction and auction fade, likely. Again, lots of detail, a lot of data, but all in one sentence. It is a one-liner, but it tells you everything you need to know. So compare this plan with the other plan, and you will see the quality of the data available and the facts available in the plan. This is what we want to see. And then he goes on to the hypothesis. First one, short, value area rejection. Actually, I would say this is value reversal. Value area rejection is more in an inside day when the price actually rejects the value area. When you don't have that, it's literally just a reversal at val. So, yeah. Second one is value area acceptance. Again, that's something that we've already seen as a possibility all the way up here. Hypo 3, short, weakness inside initial balance from a price, 1833, post downward cut, need a TPO close below the initial balance low. I don't think you need the close there. So the whole idea is that the TPO for the strongest weeb setup needs to already just exit the initial balance and then come back in the form of some kind of a partial failed auction, then hits a supply, then is unable to push through because of either time of day or lunchtime or whatever, and then starts to rotate back. Yeah, so that's the whole idea between using a strong area of supply that had a lot of trading in it, initial balance, right? And then using that area as a potential area of interest further in the session. But that's a good good hypothesis. Not sure whether we actually had a very visible supply. Yeah, so for me that supply was created in D period, so I would think that that's not maybe strong enough. You can try doing it on an inside day, but it's always going to be riskier if you don't have the supply that was already created during A or B period. So that's the difference. And final setup that this trader put down is neutral, responsive day. Great. Chronologically, that is very likely for the later part of the session. And it is actually a high probability. Why? Because we have a large initial balance day. So yeah. So hopefully you can see the difference between somebody who also has pretty much one-liners, but it's one-liners that just work. Like you don't need a lot of time to digest this. And at the same time, we have the other trader who was very, very sparse and vague in their plan. Null Set is asking, is that daily prep screenshot a customized Word document by the Gold member? I ask because I like the clean layout and would love to use it for myself if possible. I believe this is from Sign Now template. Because the screenshot that I grabbed is from a Google extension, Chrome extension link. But it literally says sign and fill PDF in Word document. So I don't know whether it is a Word document or whether Sign Now has some kind of a format. Here we go. So yeah, this is Giles's plan, by the way. So Giles can explain it to you. So it's a Google document. Yeah. And Giles, is this something that you created yourself, the template? I suspect so, because I only give the Word document. Because for me, the way I was doing things, I'm a bit old school. I know that now you have things like, what's that other thing that Gustavo uses? Notion? Is that it? I think he uses Notion. Giles uses Google Docs. But yeah, I mean, these templates are very easy to create. They're not really rocket science. You really don't need too much computer literacy to create them. It's just like, you know, it's a table with 3 columns and then some drop down menus with particular conditions. So yeah, so Giles used my outline from the course and then he made it into this document. So Null Set, I don't know whether you are on the program or not. But yeah, the initial template with these sort of conditions is found in, I think it's level 2, lecture 11, and then there's a download. So you can maybe use just the conditions to create a table. It's like a lot more succinct, I suppose. I didn't want to use a succinct anything because I wanted a possibility to explain what should go into each section, and I kind of felt that if I did it via a table, it's just going to be a very long table with very large cells while I explain to people what needs to go in there. Because if you see the original one, let me just download that from the actual course. John says, I'm happy to share if I can post the link, and D approves. I'm not sure that that links are allowed here, like unless they come from... Actually, Giles, if you can send it to me in the portal, I can try and share it, because the members are not... It's just YouTube's stupid rules, because they think that links all contain spam. So because of that, they don't allow members to actually post links. But they might allow me to do it, because I know that they allow me to post my email address. So send it to me on in the portal, and then I'll see whether that works. So we can help people cut the workload down, have a preset template. Why not? Whenever people join as Gold members, I usually tell either my assistant or I write the email myself sometimes. Depends on whether she's around or not. To go sniffing around other people's and other members' plans to see what kind of templates they're using. And ultimately, everybody is going to have their own way of doing things. I've seen as many templates as I've had traders. So, and everybody has a slightly different way of doing it. I don't know, maybe if I can... I'm just wondering, Giles, if I make you into a standard moderator, whether it's going to allow you to post a direct link. Or like I said, the other option is just plonk it in the... There we go. Okay, so let's try that. Alright, so I'm posting a link right now that Giles gave me. So guys, let me know if you can see that. It is on the channel now. Can you guys see it? Put a Y if you can't see it, and put an N if you can't. And then if you can't see it, I'm going to use a community post to attach it. Because there you can definitely do links. It's not a problem. Okay, so Brent says that he can see it. Okay, there you go. That's it. Right, so that sorts it. So admins and moderators can put this, can put links. That's good to know. Okay. Yeah, so there you go. Market stalkers helping other market stalkers. Oh, by the way, guys, if you are on Instagram, I've decided to do a little Q&A again. I haven't done it in a while. So if you, oh, Bass is here, right? Keeping quiet. Yeah, if you guys have any other questions that you might want me to elaborate on that are not maybe a part of coaching, but yeah, you can ask me over there, and then I'll sit down and over the next few hours and stuff, and I'll make some videos. I'll be answering in video Q&A. Somebody actually asked me an interesting question already. I had a little look. Do I think that ChatGPT is gonna replace traders? Honestly, I don't think that they will be replacing intraday traders anytime soon, because AI is only as good as the model that you feed it. So, you know, if you have an excellent intraday trader training the model, that might be possible, but at the same time, intraday trading requires so many changes of different things and fluidity and creativity and flexibility. I just don't think AI is there yet. They even struggle with basic stock picks, and you know, that's a relatively simplistic thing to do. So again, oh, holidays, right, I see. Yeah. See, people are still on holidays. That's the whole gist. All right, let's have a look if I can find a trade somewhere. Let's close this. Let's go back to my standard 3 chart setup that we've been doing recently. ES has gone into a nice sustained auction. value acceptance, that was again very difficult. You couldn't play that. It's too big a candle. Ignoring average session ranges and everything. Again, for me, this is unplayable. Why? Because look at the size of this candle. It falls so deep into the value area. Getting involved here, I don't even have 1 hour. It's like, why would I want to waste my time on that? What I would like to see here, looking at these setups, I would like to see either GC or CL do a failed auction long. And perhaps if I can get ES to start consolidating around about the same time, that would be a pretty good thing. Okay, so here is the original template from the course. That's what I was doing before. So yeah, to be completed on any day that you plan on trading intraday, daily market prep, you enter the name and product and session to be traded. Because I have students, like most of the students are from the States and like UK and Canada and stuff, but some of them are trading Asia, some of them are trading London, and sometimes they're like, well, I traded this and blah, 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 and I have no idea what session they've actually traded. So this is why I added that, to make sure that we all know what session we're referencing, because each session has its own little day trading time zones. The most prevalent ones and the most statistically probable ones are the ones based on post NY cut during New York, because there's so much volume, so much trading going on. And then I have the explanations of what should go into this area. So daily chart, relevant reversal pattern in the last 2 to 4 candles. So not going back a million miles, because this is intraday trading. We need to know what's happened around your price. And then daily nearby conterminous line, if any exists, price of it and how far away it actually is. And then the same thing for the 4-hour chart, maybe daily coupon price location, ADR exceeded at open, yes or no, ASR exceeded during the first hour of session, during or right after initial balance. Why is this important? It's because it implies that there's higher volatility happening. If you have an average session range that is calculated over 7 or 8 hours, and that gets exceeded immediately in like the first hour, that's relevant, that's too soon, and that most likely means you're going to have a continuation of that event. Then you have value area sentiment at open, drop down to select, and then you can drop this down. This is uneditable at the moment. Then initial balance range, same thing. Intra-session narrative, and then guidelines. As the day develops, try to determine the most likely TPO day and type and price narrative using the following interplay for trade locations and targets. Value area edge from outside. ADR exhaustion prices with price action reversals on 15-minute, 30-minute chart. Whether ADR is exhausted at the open or not. So, you know, it's quite a detailed guide of what should go into your plan. But at the end of it, once you have all of that, it literally falls into one line. But to explain it, I felt the need to do all of this. And then also I have this section about post-mortem analysis. So whether you were correct on the direction, so whether your plan and assumptions were right or not. If you were right and you made money, that's pretty good. So gather those stats for future reference. If you were right on the assumption, but you didn't manage to make money, you need to figure out why, because that's usually trader error. And if you're wrong on the assumption, and completely wrong generally, and you lost money, you need to go back and see whether you're using all of the due diligence processes that I've explained here, whether you missed something, whether you were fumbling around with rules or not. So all of that is going to give you a valuable clue over what needs to be worked on. And then also this part, not many people do that. give, like if you didn't make, this is your review, right? So if you didn't make money, give an objective factual narrative of what actually happened. So let's say that you were planning a sustained auction, but in the end, the market went into a failed auction instead. Did you stick with your bias to keep going, you know, with your initial assumption, or did you just go objectively, the auction has failed, I need to let go of the sustained auction? So that's the kind of stuff that should go here. So factual narrative of what actually happened. I was looking for a sustained auction, but there was a failed auction instead. Failed auction wasn't in my hypos because XYZ. Maybe next time I should see how often the failed auctions happen at this particular time of day and how they happen. So do they happen quickly? Do they happen to be playable, unplayable? All of that is valuable data. That's how you move your skills forward, not by just sitting there, turning up and hoping for the best, because that has never helped anybody. So yeah, as yet, I don't actually have any setups here. So it looks like today is going to be the day where I wait for the day range fill. Or I might stay out of trading altogether, because this is not a typical Thursday on CL or GC. So I just wonder, let me see. Yeah, so they're going to be waiting for NFP next week, aren't they? Because it's the start of the new month. This is a short month. Yeah, so I don't think I'm gonna have a trade today. And again, that's okay too, because you need to know when to stay out of the market. Doing like silly trades that just make no sense just for the sake of doing a trade, that's maybe a requirement if you're a market maker. You absolutely like have to make a certain volume of trades. And I worked for a company like that, didn't like it, because on days like this I couldn't just go, you know what, I'm just gonna stay out. I do have one company that requires me to do at least one trade per day, so I'll still have to open a trade, but whether that's going to be like a setup that I want to keep, that's another thing. One trade that I might be developing right now because of the lunchtime hour drift could be this long in ES, because we are kind of sitting around those average session and daily ranges. So let's see in 3 minutes if this 5-minute chart actually closes with this little reversal. And then I might just enter into that and be done with it. Just gotta take 0.5 R or something. Or anything, just anything to open up a trade, just to fill the requirement. Luckily, I don't think that prop firms online have that rule anymore. I think TopStep used to have a rule to have to open, I think it was 2 trades per month or something to keep the account, but I don't really know whether that's the case anymore. All the rest of them, they don't have minimum requirements. Or the requirements are like, maybe if the account is dormant for like a year, they might close it. But again, who has money in a prop account and remains dormant? Nalset asking, if the 30-minute candle on ES were to close as an inside bar, would you consider a bullish trade? So one question there, this question there is really, it's supposed to start like this. This is an average daily or session range reversal. Would you use a 30-minute inside bar to go in? The answer is, I don't use 30-minute chart for average session or daily range reversals. I usually use 5-minute, okay? Reason why is because you don't necessarily need the full-on 30-minute reversals, right? If you get a good, very good, definitive 5-minute reversal, that's good enough, especially if you pair it up with time of day. Because time of day right now is time for lunchtime hour drift. So, you know, I'm looking for some kind of a reversal in the other direction. Is it going to come? I don't know, but I'm not going to be using a 30-minute chart for that. I will be using a 5-minute chart. So right now, if the 30-minute ends as like this is not good enough, right? But at the same time, that also means that the 5-minute chart has failed to do a very strong candle. So, you know, usually what I like to see, I just like to see a nice bullish engulfing or a finisher that kind of exits the range, because right now on a 5-minute chart we do have a range. So if the market goes outside of that and closes with a very definitive candle, this would be enough for me to get involved, because this whole happening is at average session range / daily range, and also at the right time of day for a little lunchtime hour drift. Now, lunchtime hour drifts are not 2 and 3 hour opportunities. Usually I take 0.5 up to 1 hour. Okay, they're just opportunistic. So, but you know, they still have to have a very strong reversal pattern, definitive reversal, that the buyers have appeared and that they've stayed into the first available relevant candle. But yeah, the average session range reversals are not necessarily to be taken from a 30-minute chart. If you're trading crude oil, you may want to wait for a 15-minute close, because crude oil is like so crazy. You just want to make sure that they are definitely kind of staying there. So that will be the difference. And obviously ES is a thick market, so with lots of trades, pretty difficult to move generally. Whereas crude oil is a thin market and any old idiot can move it. So, you know, some Russian person with a lot of money, Russian oligarch who has decided that that day they're going to trade some oil, they can move it, right? They can, you know, whack in like a 150, 200 lot position out of several executions. That will move crude oil. So you don't want to get involved in those moves. So that's why I would wait for the 15-minute chart in crude oil. Anything else, ES, GC, anything that moves less crazy, you can use a 5-minute chart. And also an inside bar, like you can have different strength inside bars. You can have an inside bar that finishes up here. That's a pretty strong reversal. You can have an inside bar that has a long selling wick, but it's still an inside bar. That's an absolute no. You can also have an inside bar that has a strong candle, but it just doesn't go over half of the previous candle, which is also weak. So all of that is just a weak signal, and I wouldn't get involved. And, you know, that part goes for 15-minute and 30-minute developments too. But again, for a 5-minute chart, inside bar is never something that I'm going to be considering. Why? Because it's a low time frame, and the lower you go, the stronger that candle has to be. So inside bar on a 5-minute chart is completely irrelevant. Let's have a look at YM, because that could be a little bit different. Quick analysis. Very big sell on the daily chart, going straight through that demand. No Q points anywhere. 4-hour chart. Again, continuation. Very strong auction today on YM. No, I don't have a setup there either, because on YM I actually want this to chill, because it's still creating lower lows quite significantly and leaving single prints. So until that settles, this is too dangerous to get involved. So yeah, that's a no-go. Yeah, doesn't look like I'm gonna find a good trade. 10-minute chart looks very blech. 15-minute chart looks like it's attempting to create a 3 inside up. That's not a very good reversal either. Yeah, so no reversals. Again, D can usually find like 3, 4, 5 trades in one single session, but today it's all very quiet. Alright guys, so do you have any more questions? Because if not, I'm gonna go chill out a little bit. It was a bit chaotic because I took the dogs out, then I had to give Astrid a bath, and then I'm like, oh my god, I had to get ready. And my energy levels are a little bit low today, so I'm jacked up on caffeine, which is rapidly running out. So I'm like, come on, stay awake. So yeah, if you got more questions, this would be time to ask them. If you remember a question that maybe you forgot to ask or it pops in your head after the stream, jump onto my Instagram and go into my stories. So go into my stories and you will see a sticker there where you can type in your question. So hit me up on there and you're going to get a video answer promptly. So yeah. Alright guys, so I'm going to go and do something else because sitting here and just torturing yourself with these markets is not how I'm intending to spend the rest of the day. You just gotta know sometimes you can't find a good setup and that's okay. We have neutral, actually inside day, inside day, very large initial balance, no initiative activity whatsoever on gold and crude oil. And ES has gone into a huge sell, but it was a value acceptance that I couldn't take advantage of. So yeah, for now, there's nothing. I might come back for the last hour just to see whether I do have a setup in ES. But apart from that, you know, that will be it for today. Alright guys, that's it for this week, because this is a Thursday, I believe. Is it a Thursday? It is a Thursday. Yay me. This is the last stream for this week. I am going to be releasing another video just for everyone on YouTube. I'm going to be talking about my first trader, Jana. Unfortunately, we lost her a few years ago due to super aggressive gastric cancer, but she was actually one of the best traders that I saw. However, she had gremlins, she had awful trading problems, and we managed to rein that in, like literally within the space of like 3 to 4 months. So I'm going to be talking about what worked for her, how we did it, how much money she made in the first month, and then how she went off the rails to almost lose most of that profit in the next couple of months, and then how she got back on track. So maybe if you have similar issues, maybe to not to that degree, but you might get some ideas on how to rein in some of your own trading gremlins. So until then, let's try to be less of a muppet and more a market stalker. And I'll see you next week. Have a good day.